So what I decided to do was trade one currency pair per broker. This way I can keep everything separated. So they just started trading the British pound, and the market's been open for a whole 2 minutes now. I'm not making any money, and I don't know why. And I'm just going to throw some orders in here with a 30 pip stop to make 80 pips off of this round number without any regard to anything else. And also over here, I'm going to just lay a couple cheap orders. Here's a risk 22 pips to make 38 pips. So the strategy here is that if the market goes down, then I want to buy low. Now if I go to the smallest time frame possible, which right now is this time frame, I would just buy at the market and risk right now. And then I would put another order for the stop hunt or the retest area, and I put another one, say, now I'm thinking about 150 pips deep. Okay, put an order in here, put an order 20 pips here. So all these are valid entries for me, and it's just like you're just painting a picture. That's all you're really doing with these orders. And if you're analyzing this from a channel standpoint on the weekly, I don't think you don't have to go too far to be able to pick up a trend line here or two. If you just went for this most obvious super steep trend line, you could make the argument that you broke it back here, and now you've cleared it, and now you're finding resistance at that pivot. Of course, I don't know if I precisely, but this is a momentum trade. It's also a price trade because hell, once it took out this low, you had to know, based on previous market behavior, that we're probably going to go lower, maybe. So here, this is the 100 pip yard line. You have to know that this 100 pips is a big deal, but look at this 50 pip wick. So unless you, I don't know why this thing just, unless you are prepared for that, or maybe that's your entrance right there. So getting stopped out, and as this thing's crushing down, like say you started buying on limits here, but you were able to take a 600 400 pip amount of heat. I'd call this like psycho swing trading. But here, at this confluence point of the momentum breaking above, and I'm sure it's some kind of see, this is the reason why you can back read the Fibonacci here. This would be like 38% of, say, this, right? This would be 62. But you can just see Fibonacci proportions typically in anything you look at. I mean, if you're looking at your computer and you get inside there, I'm sure some of the parts match out perfectly with a Fibonacci. Like here's your PCI card. You know, these kind of patterns, this stuff's all over us, right? And that's not the issue. The issue is how big do you get into these trades without blowing up the account? So right now, it's kind of like, well, I would buy at the market just because it's stupid at the 100-yard line. And willing to get stopped out, but then definitely willing to buy more the deeper it goes. So, you know, what's the point at which you tap out of this trade? Well, you just do the math on all these tickets you drop. Okay, you're risking 10 pips down here, and you're risking, say, at a different entry price, you risk 30 to make 80. So you're saying that if this thing comes down here tonight, another 100, another 200 pips, which this is another thing. What's the likelihood of that? And here, if you do this grid is set at 100 pips from here to here. If you go 50 pips per day, this half-hour chart, it looks like at 50 pips per day. Say you want to make 50 pips per day or better, it would be an angle of 45 degrees on here right now. So if you just cut, this is 2 days to make 100. See that rate of descent? This is your 45-degree angle based on 50 pips. So if you're looking to trade that channel, if you're a channel trader, you already have an expectation of how many pips from the sell side, the buy side. So instead of using price, you're just going to use the 50 pips per day. Of course, as soon as you do this, you kind of screw the 45 degree of it all. But that's another way to look at it. So you already crossed over to the dark side here. You took out that 45 degree momentum angle. But it's fine with me because I will just get in as it plunges. And on the well, that's just a pound. And this is a silly pattern here. You see a lot is the classic walk down, or the sideways top become bottoms here. You have the triple bottom becomes the top. Becomes the top in wicks, and all I did was put a 1 period moving average on top of the candles. So the candles are there for people that want to see candles, but it is an extra step. Like this opening here is missing from the line chart. The line chart's clean down. The candle makes it look like well, the candle shows you that you could have got in on this train here, where this is more of a true wave count, because it's a swing move, where the candles kind of give you the feeling that well, they also show you that if you had a buy limit at this, you still would have got filled for the long. And if you're a volatility breakout trader, this is the 100 pip range, you just made just a boatload of pips in 1 week. And here the same thing. I would say you're buying here, and my ultimate exit's going to be about 125 pips. This is 25 pips, the dotted line. So you're going to count off how many pips you want to make on these swings, and you can trade it from both directions. So there's no you can either be a boy or a girl, like that song says, and you can be the 6-year-old girl. Some guy, he wants to be 6 years old. Not only does he want to be a girl, he really wants to drop out of society and left his family. Gotta love that. Worse than being a trader, dirtier than being a trader. Here, and here's the channel argument for the this is the pitchfork down here. Here's the perfect bottom becomes a double top. So this is a valid momentum rollover. It looks like the pound's going to find support at this double top internally here, at least for me for tonight. If not, if this double top here that takeout into the future doesn't hold, then yeah, I guess I'll just be you know, looking to mortgage the car or something.